Well, Andrew, Friday again.
Friday again, Friday, November the 27th. Um, and we have discovered something important this week. Not only is capitalism deformed, Keith, but its deformation, if there's such a word, has been caused by your friends, the venture capitalists. So why is capitalism deformed, and what have the venture capitalists done to ruin it so much?
Well, so here's the newsletter lead this week, and it comes from a New Yorker article. Here's one of the key quotes from the article. Even the worst run startup can beat competitors if investors prop it up. The VC firm Benchmark helped enable WeWork to make one wild mistake after another, hoping that its gamble would pay off before disaster struck, which is kind of an interesting quote. It's a long piece in the New Yorker, and the headline...
By Charles Duhigg, who's a best-selling author and also a New York Times writer. So
it's kind of interesting because it's a BuzzFeed style headline, because actually the article is mainly about WeWork, and they've taken a clickbait headline, how venture capitalists are deforming capitalism. And it's a simple point. He's making the point that if you have enough money and you throw it at something, you can make it work. Funnily enough, his article is proving the opposite, that no matter how much money you throw at a bad idea, it doesn't work.
Well, I'm not sure. I mean, firstly, WeWork is an interesting case where, and I'm not saying I told you so, but it seemed to me at the time that it was clearly a scam, because there's no way it could ever work. It reminded me of Enron. I think it's the closest thing to Enron, and the guy in charge was somewhat like Enron. I'm sure he was in jail.
In my venture work,
What?
in the work I do in venture, there's a religion, and the religion's called unit economics. And unit economics is the measure of whether something can be profitable and at scale. And yeah, you're right. WeWork never had or ever could have had good unit economics. That said, to accuse venture capital of deforming capitalism due to that investment makes it appear as if that's a typical case. And I think, in venture capital, given that 9 out of every 10 investments fail, there's lots of failure. But the truth is, there's also lots of Teslas.
Yeah. Well, and Tesla a year ago seemed in some ways like WeWork.
Well, Tesla always had great unit economics, but it was making a loss in order to grow. That's the difference. Yeah, if you grow something that can't be profitable, you just make a loss forever.
I think what this piece shows is the power of superstardom. You need the who's the WeWorks guy?
Neumann.
What's his name?
I think it's Neumann or something.
Yeah, Adam Neumann. And it also focuses on one particularly seemingly erudite Anglo VC, is it Benchmark, who contributed to the myth of WeWorks. So here's my question on WeWorks. Can venture capitalists back a losing proposition like WeWorks and still make money?
There's a lot of variables in the
WeWorks, where most of the money that went down the toilet, so to speak, I mean, did that come from Asia?
It came from Masayoshi Son from SoftBank most recently, but there were prior investors
left holding the bag, right, when the music stopped.
Well, he's done an interesting thing. He's marked WeWork down from its peak to currently $2.9 billion of valuation, and he's cleaning house in that he's trying to redirect the model to something that does have positive unit economics. He's prepared to take a major write-off, but in doing so, he also owns most of the company now. And as he builds it back up, I wouldn't rule out that he will make good money from it.
What do you think of the other potential WeWorks around? I mean, Uber comes to mind in the sense that I still think there's a book or a movie or certainly a long article about all the people who invested in the angel round at Uber. They made so much money, um, and it's still not clear, even though Prop 22 passed in California, it's still not clear that Uber is a viable company.
So I think Uber is closer to Amazon if you think of it abstractly as a bundle of value. Amazon, if you look at the amount of money Amazon has lost over the decades, in order to get as big as it is, it's a large sum. Now, most of the money it spent came from its own revenues in recent years, or from bonds, putting bonds into the market and selling them and using debt. So its equity has actually become very valuable because of that. And I think Uber, ultimately, because it doesn't employ drivers or buy cars, it basically takes 30% of every ride, and it's mainly a software company, should be highly profitable at the unit economics level. Unlike, say, WeWork, which has to buy buildings, or Open Door.
Yeah, WeWork's the other end of the thing. I guess the difference between Uber and Amazon is Bezos versus Kalalnik. And Bezos has always managed to be a hero genius type, whereas Kalalnik is smart and dynamic, but also has an element of the criminal in him, which ultimately cost him, right?
Right.
And I guess Kalalnik's much closer to Newman or Neumann at WeWork.
Well, he spent a lot of money on non-core elements of Uber, like self-driving car R&D, for example.
I mean, you're an insider, so for you it's less shocking, and I'm a semi-insider. But for ordinary people who aren't in the community, who aren't in tech, there is something very troubling about this. Is that VCs throw, tens, hundreds, maybe even billions of dollars at an idea like WeWorks, which clearly couldn't work and was self-evidently, if not fraudulent, profoundly problematic.
It's definitely not fraudulent. I mean, if you think about
there's
it,
an element of fraud in the sense that the whole thing got going in the first place when, as you say, it couldn't really work.
well, if you modeled it out, what I do with startups is I model them out. If you modeled it out and you said, okay, my rent on this building is $50,000 a month, and there's 300 desks, and if I could rent 50% of the desks at $1,000 a month, then I'm going to have a gross margin. Open Door does the same. Open Door buys and sells houses, and they sold $5 billion worth of houses last year, but their gross margin was 1.9%. So basically, there are businesses which might work at scale. You have to model them out, and you have to,
anyone can model them out. All you've got to do is have a computer, right? I mean,
yeah, but then you've got to do the work. Then you've got to get the buildings,
but
negotiate
as this article shows, which is whether or not you agree with it, it's very well written and very readable. It was Neumann, the sort of charismatic founder, who convinced everyone, who's spellbinding. I mean, he's got the Kalalnik or the Bezos quality of and obviously Steve Jobs, of convincing people that what couldn't be true actually is true.
It's not. I'll be honest. Remember, I've been responsible for raises of close to $1 billion in my career, and clearly you have to sell and tell a story when you do that. There's no way you're going to be able to do that unless you're charismatic and can tell a story. But you also have to have an economic model that, when converted into reality, produces value. And I think my experience is most VCs do a really good job of filtering out things that will lose money. So I'm going to guess, and I haven't seen it, there must have been an economic model at the core of WeWork that was believable to smart people. I don't know what that spreadsheet was, but
Well, it's always the case. In retrospect, it seems dumb, but Enron had a model. WeWorks have a model. I mean, you can always come up with a model. You can always. I always think the numbers
yeah,
are the
but
most fictional thing in any presentation. You can always bend the numbers. You can always bring them down or bring them up or whatever you need to do to make a profit.
yeah, but you as the entrepreneur, which I mean, you'll do this for Now TV. You as an entrepreneur can tell whether the model is something you're comfortable executing or not. So it's pretty hard to fake it, to be honest, unless you're a sociopath. Because
I think the VCs do have, if not a moral problem, certainly a PR problem in the way they're perceived by other people. In the same way Silicon Valley has a bit of.
I think
I mean,
that's true.
Duhigg is he's not some sort of left wing. He's not. A Bernie bro. He's a mainstream best-selling author, and one who mostly writes about business and insight and intuition. I mean,
but his ability to determine, does that give him the ability to determine the quality of an investment more than, say, the benchmark capital partner that's mentioned throughout the article?
But I don't think he's trying to do that. He's simply telling a story in this piece. I mean, in the sense that he's revealing to people the absurd story of WeWorks, of an idea, as you acknowledge, that wasn't viable. They raised hundreds of millions of dollars, billions of dollars. It was worth many billions, and then it all came crashing down, and someone was left holding the bag.
Yeah,
I wonder what, just as most journalists don't like VCs, most VCs don't like journalists. I wonder what our friend Paul Graham would say about all this, Keith.
Funny you should say that, Andrew. This is breaking news because it's just happened. But let's.
Oh, what a coincidence!
This is Paul Graham.
It's not a coincidence.
Paul Graham sounding off about the New York Times, along with, by the way, along with Joe Lonsdale and a couple of VCs and Mike Larrington, all making negative points about mainstream media. And Gabe Rivera, the founder of TechMeme, down below, making the point that the New York Times has now hit 7 million subscribers digitally. So whereas Paul Graham is predicting the demise of mainstream media, Gabe is highlighting the success, at least of the New York Times.
So what is it about people like your friend Paul Graham that brings out their distrust and dislike of traditional journalists, Keith? Why don't they like them?
I don't think Paul Graham is really a marketer at his core. He's a coder, an engineer, and when you've done startups successfully, you understand that you need to leverage the media. Of course, the media changes all the time, but the New York Times is a go-to place to get them to write about whatever it is you're doing, as is the Wall Street Journal, as is The Economist, and so on and so forth. And I think engineers at their core don't understand marketing and how it contributes to success.
They're just very thin-skinned. They don't like to be criticized. They don't like to read anything that in any way doesn't confirm their often bizarre view of the world.
Well, it's also true, Andrew, that when you're an entrepreneur and an innovator, by nature, you're doing things that no one understands yet. And so you get a lot of negativity from smart status quo believers. Disbelief is the norm. And that is incredibly frustrating for somebody trying to change the world.
Why? I mean, if I had a really brilliant idea that changed the nature of everything, I would actually want big media to write against it, because that would confirm my revolutionary idea. There would be nothing more annoying than people on the New York Times who got what I was trying to do. Then it wouldn't be very interesting.
No, I've been there. I agree with you. When I did Real Names, there was all these articles saying Keith Tier's trying to destroy the internet by inventing keywords to replace URLs. And I loved it because any normal person would much prefer keywords to URLs.
And then that was the thing about WeWork, is it wasn't even a revolutionary idea. I mean, it was such a stupid idea that they would buy up all the real estate.
Well,
And then I would always ask people, where's the value? Oh, they own all this real estate. What could be more absurd than a next generation company that was buying up New York commercial real estate?
well, Open Door's doing the same now with residential real
Are you
estate.
suggesting that Open Door is a bit of a scam as well?
Oh, it's not a scam, but it's a thin margin flipping business. Where
Well, that's
WeWork
your
couldn't.
polite way of saying it's a scam, probably.
No,
But they're
no,
not going to have the same. Open Door's not going to have the same fate as WeWork.
no. Open Door is run very well. It makes money. It's just that it has to do a lot of sales to make a small amount of money.
Well, let's move on from the defamation of capitalism. Another of your suggested pieces this week, Keith, argues that it's not capitalism that's deformed, it's civilization itself. So it's a pretty dark picture you're painting this week. What's going on with that?
Yeah, so this is the Atlantic. It's interesting this week. It's the New Yorker and the Atlantic dominating.
Mainstream journalists, those evil people.
So this is a very compelling dark piece where Graham Wood interviews a guy called Peter Turkin.
A Russian, appropriate. Only a Russian could be that dark. I mean,
He's-
not literally dark, but
He's a Russian and he's a professor in Connecticut at the university there, and he's a specialist in modeling civilizations. So he ties mathematics and statistics to society.
he's a kind of geeky Jared Diamond.
He's geeky. He started life in his PhD studying beetles, not the Liverpool variety, but the bug variety. And he was able to predict population changes and shifts, and he's applied it to human civilization and has come up with, 10 years ago actually, predicted that 2020 would be a terrible year, which it's turned out to be true. And then, and as a result, he's become a bit of a celebrity.
Right, no one predicted. He didn't predict COVID in 2020. I mean,
No,
the reason 2020 has been bad is because of COVID.
He didn't say why. He just said it would be bad. And now,
he didn't know.
As chance would have it, if you probably
like Mr. WeWorks, another fraud, Keith.
It's probably a fraud, and I put it in because it's a really great read, and the writer is buying to some extent the narrative.
So what's the thesis then? I mean, it's not about COVID. Why does he suggest we're heading for the
actually, it's an intelligent thesis. The thesis is that, and this you'll relate to this very well. You'll probably disagree with it, but elites are overproduced in society as society gets better, and there isn't enough good work for the elites to do. So the second level elite will start to turn on the top level elite, and create social conflict, including violence, possibly as civil war, as different parts of the elite fight each other.
And that makes sense in what we've just talked about, because New York Times journalists are definitely second tier compared to the Paul Grahams and the benchmark capital VCs of the world. So there is I think in some ways he's right. There is an intellectual civil war brewing between, it's not Republicans versus Democrats. I think it's a civil war within the Democratic Party or within the mainstream media community.
And within the Republican Party. I mean, I don't know if you saw that guy with a megaphone in Atlanta last week saying to a large crowd, to the Republican Party, if you're not supporting us, actually it was in Georgia. If you're not supporting us challenging the results of this election in Georgia, then we're not going to be supporting you, Republican Party. And so the schism between what looked like blue-collar Republicans, pro-Trump, and the core establishment of the Republican Party is plain for all to see. And
this guy's if he's right, which he may be, that the problem with the world of the 2020s is that we're not producing enough jobs for the elite, so there's going to be civil war. It's a sort of it's the argument that was made before, correctly, the French and the Russian and the Chinese revolutions. Do you think VCs have a moral. I don't know. Using the word moral responsibility with VCs is slightly chilling, but do they have a degree of responsibility to invest in companies that might try to fix some of this stuff?
Well, venture only has one responsibility: to return money to its investors. And there
There
are,
is a moral responsibility, Keith, as well. People, they're not going to invest in eugenics companies. They're not going to invest in stuff that's
honestly, I think
really on the fringe.
you're right. There are lines, but they did invest in Juul, for example. So the moral responsibility is definitely trumped by the financial one. It's quite interesting if
Yeah, and
you.
it definitely is important in terms of AI because still the biggest issue on the horizon for tech and society is the automation of work, which obviously touches on what this guy's saying.
Yeah.
And actually, COVID has compounded that. I just read a piece in the journal today about how how COVID has essentially destroyed the prospects of all university kids who graduated in 2020. This is going to be a whole generation that have been wounded. The next generation of Mussolinis or Hitlers or Lenins or Stalins.
Interesting enough, there is an opponent that the Atlantic quotes. I'll put it up. This is again an American professor with a Chinese background, disagreeing and making the point that human beings are much more complicated than beetles, and that humans pull ideological power moves all the time. And for a natural scientist to be able to incorporate the myriad complexity of human strategy, emotion, and belief basically is impossible. So he's making the point that even if the model was correct, and therefore the results of the model are believable, human beings are clever enough to figure out how to not do things that it's predicted they will do.
And not all the news this week is bad, Keith, in spite of the fact that some people are writing about a deformed capitalism or the end of Western civilization. There are still Silicon Valley investors, entrepreneurs who are pretty cheerful, who actually see the events in November as reason to be cheerful. One in particular, a nice TechCrunch piece that you picked out.
Oh, the social media echo chambers piece, do you mean?
Yes.
Yeah, that's I thought it was a very interesting. It's written by Bernard Moon, who I don't know.
Who is a friend of mine. He's a Silicon Valley based venture capitalist with a focus on Korea. He's a Korean American. He's a really nice guy.
So he makes the same point actually as the Chinese professor, which is that there were all these fears that there'd be a civil war when Trump lost, and all of his gun-toting supporters would take to the streets in militias. And it was all over social media, but it was also over mainstream media. It wasn't just social media. So Mr. Moon here is making the point that pundits and intellectuals and politicians and social media doesn't constitute truth. That human beings are way smarter than they give them credit.
We certainly knew that. We didn't need Bernard Moon to tell us that, but he does remind us that, a month ago, everyone had all these dire predictions of civil war, of the, people on the streets, both left and right, killing each other, and none of that's happened. I mean, I have to, I predicted that none of this would happen because I just think, especially the Republican, the right wing of the Republican Party are all mouth. They sit at home doing their social media, but they're not really willing to fight. Had Trump won, or had he managed to pull off, had the margins been really tight and he'd managed to destroy the voting system, I think you would have had violence.
Now, I will throw it back to you, Andrew. You're a pretty strong advocate of the dangers of social media. And in a way, he's making the point that it's less dangerous than you think because human beings are more intelligent than we give them credit for.
Well, he's making the point that there is a center, that is a sort of unspoken center, and that everyone who's talking about these divisions goes on social media. They go on Parler or Twitter or Facebook to prove their case, but most people aren't part of that world, which I think he's right on.
Very good.
So what's the big tech news this week, Keith? Leaving aside politics and the end of civilization, anything really happening?
Nothing major.
No safe harbor stuff. I saw an interesting piece on safe harbor changing everything, although we keep on having those.
Yeah, no, I mean, the newsletter this week, which is random because it's the stuff that stands out from what I read in the week, is all big thinking. Maybe it's the Thanksgiving reflection moment, but
after a big meal, yeah, you have. We don't have anything from Paul Graham, but we do have something from one of your other heroes, Elad Gil, the unusual signs of a billion-dollar company. He shouldn't be telling everyone that, because now we all know it. What are these unusual signs?
Well, this is a discussion with another really interesting guy called James Currier. James is at a VC firm called NFX, which is quite different to most VC firms. It's building a venture platform with great information and applications for funding. It's doing a lot of interesting stuff. And Elad Gil is in the top 5 performing angel investors ever. So it's a conversation between the two of them, and they're really focusing in on the founder as the best signal of what will happen. It's the opposite of the Neumann point, because
well, except that if you believe Neumann, then the founder is everything. I mean, you invest in people rather than ideas. Isn't that fair?
Yeah, no, exactly. It is fair. And anyway, they're looking at all the things which signal that a company is going to be a future unicorn. Now, they go into things like the addressable market, what the definition of the startup is, what the future growth might be through a model, and so on and so forth. So it's quite detailed. I can't repeat it all here, but it's very good thinking. And these are two of the very best minds when it comes to this. So if you're a founder and you want to sell your company to an investor as an investment, understanding this conversation will impact the way you tell your story big time.
What about the tweet of the week this week, Keith?
The tweet of the week is here. I actually had time to put it on screen. It is the former head of the SEC acknowledging that he's still the chairman, by the way, but the assumption is he's going to move on. He's making the point that they do not consider Bitcoin to be a security, and therefore they cannot regulate it. And more positively, they see it as a payment mechanism and a store of value. Now, I've chosen it as the tweet of the week because those comments coming out of the mouth of a blockchain enthusiast would be completely normal. But coming from the chairman of the SEC, they're profound and significant for the future of value storage, and probably not payments. I think he's wrong about payments.
But doesn't it confirm what we're already seeing with companies like PayPal allowing ordinary people, to trade with crypto?
Yep, and Square Cash, and Robinhood, by the way. My 13-year-old has $200 worth of Bitcoin in a Robinhood account. My 19-year-old has like $1,000 of Bitcoin in a Robinhood account. So it's become very easy. Bitcoin is now at $17,000. That's down 2,000 over the last couple of days. It went as high as 19,000, and its market capitalization is larger now than it was at the peak of the bubble 2 years ago.
And that's why it's your startup of the week, Bitcoin.
Bitcoin is indeed.
Is it a startup though? I mean, no one owns Bitcoin.
You know,
maybe
think of it think of it as let's put this on screen. This is Visual Capitalist, which is a site I love. Bitcoin is near all-time highs, and the mainstream doesn't care yet. The point being made here is that, and if you look at the orange line, that's Bitcoin over the last couple of years, from a mountain peak to another mountain peak. The point being they're making is, last time it was a mountain peak, it was all consumers speculating like a bubble. But this time, Google searches for Bitcoin are at an all-time low. And so this time it's driven by institutional investors buying into it, which goes along with the SEC chairman's point. And now, for those who don't know, you can go to your stock trading site of preference and type GBTC. So BTC for Bitcoin and a G at the beginning. There's a trust now that lets you buy 1,000 shares of the trust are equal to 1 Bitcoin. And you can trade shares that are basically Bitcoin. And that trust has now grossed billions of dollars of inbound investment money over the last 6 months. So there's something gold-like about Bitcoin as a store of value. It's worth saying the dollar, by the way, is seriously down against the pound and the euro in the last month or so. And the predictions are that the dollar relative weight to the rest of the currencies in the world is going to decline. So for those of us who live in the US, dollar isn't a good place to keep our store of value.
So you're saying Bitcoin is not the next WeWorks, it's real?
To be honest, that's an open question, because Bitcoin is real.
You're saying it isn't. You're saying you're
no. I'm not. I'm going to define the meaning of real. When it comes to stores of value, real is a function of human decisions to use something, and you can't predict human behavior. But if humans choose to use Bitcoin as a store of value, yes, it will be real.
And what can go wrong? What's the worst case scenario to come back to our Russian student of Beatles? How could it destroy our civilization?
It's a true globalizing store of value that kind of overrides the fiat currency nation state central bank structure. So if you believe that the future is a harmonious human race that doesn't care about nations as depicted in, let's say, Star Trek, then it's all good. But if you believe that nation states are permanent and will defend their currencies against each other first and then resist globalism, then it's probably bad. And
Bitcoin isn't the only cryptocurrency. I mean, you have Ethereum, you have others. So yeah, how are they doing?
They pretty much mirror Bitcoin. It's very rare although Ripple, which is a slightly different animal, Ripple did rise about 50 to 60% this week and then dropped down a little bit. So it is performing differently than Bitcoin in the short term.
And in contrast, are the banks, the traditional banks, are they in trouble?
I think I distinguish between central banks and retail banks.
Not the central banks, but the retail.
I think retail banking is, too 19th century to be interesting.
It's like the newspapers. Yeah, and we're back in 1996. Is that fair?
I think it is fair. I think it's inevitable that human need to manage money and to read will be satisfied in some way. But the 19th century answer to those needs is probably not the same as the 21st century answer.
And Keith, finally, because we got to end here, convince me as a fairly traditional consumer of why I would want to use Bitcoin or Ethereum or any of these cryptocurrencies in contrast either to cash or traditional bank-rooted dollar value. What's in it for me? Why would I want to waste my time doing this?
I would compare it to your savings account rather than your cash and your bank account.
Why would I want to translate my savings account, my retirement account, into Bitcoin?
Because your retirement account it depends on the assets it's invested in. Think of Bitcoin as an asset, like a house or a stock.
Yeah, but you have a house so you can live in it. You can't live in a Bitcoin.
Yeah, but you probably have some money somewhere that is just designed to accrue value over time.
Yeah, and it's very secure. I have it through Merrill Lynch. It's my retirement fund. The last thing I want to do is gamble on 50 or 60%
swing
valuation. Things that go up or down 50% in a week. Why would I want to do that?
Well, the point of this article is that is probably in the rearview mirror. That Bitcoin is a lot more stable due to institutional adoption.
Okay, you're still not convincing me. Why would I want to switch into Bitcoin?
Because it'll turn your money into more money faster than any other asset.
No, you're arguing it's a speculative thing.
No more than gold is.
So it's an alternative. If I don't want to buy gold and I don't want to buy,
it's a network. I can explain it. It's a network effect. The more people that choose it, the more valuable it becomes, because it becomes a credible store of value. So
that's what Adam Newman said about WeWorks, and it didn't work out that way. The more real estate he bought up, the more valuable it is, and in the long run,
not the same thing. That's cheeky.
Why is it cheeky?
Well, because buildings that you need to make a profit from renting out desks isn't a store of value.
But Bitcoin isn't unlimited. It requires physical mining of digital product. So it's not like
it only requires physical mining until it gets to 21 million, and then there's no more mining.
So you're confident it's not going to bring down Western civilization?
It's just an asset.
And what percentage of your assets lie in Bitcoin or Ethereum or any other crypto?
About 10%. I wouldn't put
wise from Keith. 10%, I think, is a maximum, and that's entirely speculative.
Well, it's banking on human adoption.
Using that word, banking, liberally, right?
Correct.
Well, good luck with Bitcoin, Keith. I will remind you that this time next week, when Bitcoin crashes 80%, that 10% of your worth will be 80% down, and we will continue this conversation and many others. Have a great week, and we will see you next week, December 2020. We're crawling to the end of this dismal year, and I think we're all happy with that.
Thank you, Mr. Andrew Keen.